Time now for a look at some of the business news. For that, we're joined by Cole Stangler. Cole, going to start with the impact of the new health restrictions, notably on the hospitality sector in Belgium, bringing in currently some of the strictest restrictions in the world.
That's right, Eve. Those ultra-tight restrictions took effect this week, and in Belgium, bars, restaurants, and cafes will all be closed for a month. The latter two can only provide takeout service until 10 p.m. While the rules are designed to control the spread of the virus, they're also causing headaches for a sector that's already seen its fair share this year. Valerie de Kemp reports.
Barely keeping their heads above water, many business owners in Belgium now fear they might have to pull the plug for good. Bars and restaurants will remain closed for the next 4 weeks as the country seeks to curb the spread of the coronavirus. More than 57,000 businesses employing 120,000 people are now facing an uncertain future.
C'est comme le premier, c'est assez catastrophique. Donc, on va voir, on va essayer de tenir, on va voir. On a des aides de l'État, donc c'est déjà quelque chose, donc c'est mieux que rien.
The hospitality industry estimates the nationwide lockdown last spring cost them 47 million euros per day. Now they're dreading a similar outcome. In a bid to appease their fears, the government is expected to pass a 5 million euro stimulus plan. Those unable to work will receive an allowance of up to 3,200 euros per month for a family, twice the amount they had been given at the height of the crisis. Meanwhile, the industry says that will not be enough, accusing the government of targeting bars and restaurants unfairly.
We think that it is not only unfair, but we think it's not the good or the right solution, because now what will happen probably is that a lot of people, they will make parties at their home without any restrictions about safety.
Suppliers are also preparing for the worst. With demand from restaurants suddenly grinding to a halt, their losses could exceed 320 million euros for the next 4 weeks.
Let's take a look now at some of Tuesday's trading action. Shares on the major Asian indexes in largely negative territory so far. As you can see there, the Nikkei down around 0.6%. The Hang Seng down around 0.5%. Also losses on the Kospi in Seoul. Heavy losses for automaker Kia Motors and its parent company Hyundai. It's after the pair warned of a decline in profits due to engine issues.
Another of the big issues, Cole, weighing in on investor sentiment is that, well, apparent from the outside anyway, lack of progress in stimulus talks in the United States.
That's right. Disagreements continuing between Democrats and Republicans in the U.S. House Speaker Nancy Pelosi has said today is the deadline to reach a deal before next month's election. She met with Treasury Secretary Steve Mnuchin Monday, with the two saying afterwards that, quote, they continued to narrow their differences. The House's $2.2 trillion plan is slightly more than what the White House has backed. Any deal, though, still needs to get through the Republican-controlled Senate, where opposition to further stimulus has been the most pronounced.
And finally, the world's largest asset manager, first of all, is reporting a big spike in profits, Cole.
That's right. UBS reported a net income of 1.8 billion euros for the 3 months ending in September. That's up a staggering 99% from the same period last year. Beating analyst expectations, the group's investment bank division performed especially well amid heavy turnover in global markets, as did its wealth management wing. The Swiss bank called the earnings its best third-quarter results in a decade.
Okay, so some positive news. Next up, finally from you, for this hour, the United States and Brazil have stepped up trade and investment ties.
That's right. The countries held a virtual summit on Monday hosted by the U.S. Chamber of Commerce. It featured an appearance from U.S. Secretary of State Mike Pompeo, who stressed the importance of reducing the country's dependency on China. While it's not a full-fledged free trade agreement, the countries did agree to a string of mini deals. They aim to increase trade, strengthen regulatory practices, and crack down on corruption. All welcome news for Brazilian President Jair Bolsonaro. Take a listen.
In the last year and a half, together with President Donald Trump, we've brought the relationship between Brazil and the United States to its best moment ever. And with this agreement, we have inaugurated a new stage in the relationship between the two largest economies and democracies of our hemisphere. This triple package will reduce bureaucracy and bring even more growth to bilateral trade, with beneficial effects as well for the flow of investment.
Now, Eve, this is a strategy we've seen from the Trump administration, these mini deals. They've signed them with China, the EU, and Japan. Critics, though, on the other hand, saying that they're leaving out key parts of trade that are really designed for these larger free trade agreements. So a point of tension there.
Okay, another point of tension, Cole. Cole Stangler there with our business news. Thanks indeed for that. Time for us now to take a very quick break.